Welcome back to Alpha Recap, your after-hours briefing on the market storylines that matter today. I'm glad you're with us. As always, if you have questions, you can reach us at stockalpha.ai. Today we're breaking down guidance-driven volatility that rippled across chips, memory, and AI-adjacent names after Broadcom reported and chose not to raise its AI revenue outlook.
Thanks for having me. Big day. Markets closed down after that Broadcom note, and the chain reaction was pretty rapid. There's a lot to unpack.
Totally. So let's start with the headline. Broadcom's restraint on AI guidance. Why did the market react so harshly?
Broadcom sits high in the AI supply chain, so when they didn't raise their AI revenue outlook, analysts treated it like a signal on demand and customer procurement. In growth-adjacent sectors, a lot of the value is forward-looking, so guidance matters. When a bellwether doesn't lift its outlook, multiples can compress fast, and today's sell-off showed that.
Right, guidance as the narrative driver, not just earnings themselves. And the sell-off didn't stay contained to Broadcom.
Exactly. Memory names, chip designers, optics suppliers, they all got caught up. For example, coverage flagged Micron as vulnerable to a potential record market cap contraction given extreme valuation dispersion in memory scenarios.
That phrase, valuation dispersion, can be a mouthful for listeners. Break it down for us in plain English.
Sure. Valuation dispersion just means the range of possible outcomes for a company's value is really wide. With memory companies, earnings swing a lot depending on inventory cycles and utilization rates. So one scenario could have a big recovery, another could have a big hit, and the spread between those scenarios can be massive. Today, some analyses showed dispersion figures, roughly in the hundreds of percent. That means higher tail risk for anyone concentrated in that space.
So markets closed down because the forward-looking assumptions got questioned. How did that affect other tech and adjacent names?
It ricocheted. ARM and other IP designers lost momentum. Optical networking players like Ciena re-rated despite decent headline numbers. And even technology-adjacent names such as Tesla weren't insulated. Sentiment around AI growth became the connective tissue. If AI upside was being priced in and that got dented, a lot of names felt it.
Let's pause on Ciena for a second. The note mentioned an adjusted fiscal second quarter earnings per share of $1.64. Why didn't that cushion the stock?
Good question. Ciena's adjusted EPS showed improvement, but the market had been priced for a beat and raise cadence across the sector. Optical networking is capital equipment dependent. Customers buy in cycles. So sequencing of orders and sharper forward commentary usually matters more than a single quarter's beat. Today, the narrative, uncertainty on customer spend, dominated.
Understood. Another story that popped up was Apple's App Store billings for AI-focused apps. Tell us about that.
Apple reported a four-fold increase in App Store billings for AI-focused apps, so 4 times the billings year over year in that channel. That signals accelerating monetization of platform services, which some analysts think could be an earnings growth lever that's less cyclical than hardware.
4 times. That's a meaningful data point for platform monetization. And yet the day was still dominated by guidance sensitivity. Moving to consumer, Lululemon cut its annual outlook and gave weaker second quarter guidance. Management blamed negative media coverage and product issues. How should listeners think about that?
Lululemon is an example of narrative risk, where perception can amplify operational issues. Management said media coverage and disappointing product launches hurt demand. The market has to decide whether this is short-term, perception-driven weakness or the start of a structural slowdown in demand. That debate creates volatility because it affects top-line and margin assumptions.
Okay, quick reality check. Trulieve. They deconsolidated Schedule 3 medical assets from adult use operations. What's going on there?
That's a structural regulatory move. Exchanges like the New York Stock Exchange have rules about companies with federally illegal operations. By isolating Schedule 3 medical assets, Trulieve is trying to create a clean path for an NYSE uplisting. It's a corporate structure workaround, and other cannabis companies are watching closely for precedent.
Mm-hmm. Regulatory tailoring as strategy. Speaking of cross-sector themes, the report flagged long-term unemployment rising to about 58% of the jobless. That seems important for consumption risk.
Very important. When a larger share of the unemployed are long-term jobless, consumption can weaken and stay weak. Analysts pointed to about 58% in the cited coverage. That raises downside risk for cyclical discretionary names and could compress earnings for retailers and service providers.
Right. A slower consumption scenario creates a headwind. There were some smaller data points called out too. Teledyne at about $618.31 a share with a strong 6-month gain. Enact trading around $40.58. And Zoomies posted $193.3 million in revenue, but a GAAP loss of 82 cents a share. Lots of mixed signals.
Yeah, it's a patchwork. Zumiez beat on revenue by a couple $1 million, but missed on GAAP earnings by a penny, which complicates the retail read. Meanwhile, some names like Teledyne were strong, a reminder that not everything sold off equally.
So we've got guidance-driven volatility, valuation dispersion, narrative risk in consumer names, regulatory workarounds in cannabis, and macro labor cracks. How should different types of market participants interpret all this?
Analysts framed it this way. Momentum and event-driven traders should expect heightened intraday and cross-sector volatility. Keep an eye on liquidity and catalysts. Growth-oriented and AI-exposed investors are now prioritizing explicit upward guidance from bellwether suppliers. Absent raises, those names can be repriced even with solid current execution. Value and income investors might favor defensive, stable cash flow stories given the macro risks. And long-term allocators should monitor structural trends like platform monetization and regulatory changes, but also stress test portfolios against guidance shocks.
Got it. I want to dig into one more technical point: memory cyclicality and why Micron got singled out.
Memory is highly cyclical because revenue depends a lot on utilization and inventory. Small changes in demand can swing earnings dramatically. Coverage highlighted extreme scenario dispersion, roughly 700% in some analyses, meaning the upside and downside cases are extremely far apart. That kind of dispersion makes the space binary. Either recovery squeezes margins back up, or multiple compression and volume declines make for a painful drawdown.
700%, that's massive, even rounded. So risk controls are critical. Let's shift to strategic considerations going forward. What should listeners be watching in the near term?
First, treat guidance as a primary catalyst. Prioritize upcoming earnings and the actual language companies use around AI revenue. Second, reassess scenario ranges and valuation dispersion. Don't lean on single-point estimates for cyclical names. Third, monitor macro labor indicators as a cross-sector risk. Fourth, watch regulatory playbooks. Deconsolidations can change comparability and listing outcomes. And finally, reinforce position sizing and stop-loss discipline for momentum-driven volatility.
Short reactions.
Yeah, that tracks.
Right.
Mm-hmm.
A couple of disagreements among analysts were noted in the coverage. Is AI growth resilient enough to weather conservative guidance? And is Lululemon a perception issue or structural demand problem? How are practitioners debating those points?
Some analysts stress secular AI demand, platform monetization, and supportive infrastructure like low-carbon power providers could sustain growth. Others argue the market pays for visible guidance, so without explicit raises, near-term returns are at risk. With Lululemon, the split is between those who see this as a temporary brand perception hit and those who see early signs of demand erosion. Both views are defensible, which is why we saw sharp intra-sector moves.
And Brookfield Renewable popped up in a letter noting it could benefit from AI-driven demand for low-carbon power. How does that fit in?
Analysts pointed to the need for dependable, low-carbon power as AI deployments scale. If data centers and AI infrastructure prioritize cleaner power, companies in renewables could see durable demand growth. It's a thematic long-term read, not a short-term claim. Analysts note it, but it's one part of a broader energy and infrastructure story.
Before we wrap, any fast takeaways you'd want listeners to remember from today?
Sure. 1. Guidance mattered more than earnings in tech today. 2. Valuation dispersion in cyclical tech, especially memory, is extreme. Expect binary outcomes. 3. Narrative risk can move consumer names fast. Lululemon is a live example. 4. Regulatory structuring, like Trulieve's deconsolidation, can change listing paths. And 5. Rising long-term unemployment, about 58% of the jobless in the cited coverage, is a macro consumption risk to watch.
Excellent. Final, short reactions.
Honestly, I was a bit surprised by this one.
Yeah, absolutely.
Right. Guidance is king today.
Okay, wrap up and sign off. Today's market was dominated by guidance-driven volatility after Broadcom didn't raise AI revenue expectations, and that pushed a broad repricing across chips, memory, optics, and even some consumer names. Apple showed meaningful platform monetization with a four-fold increase in AI app billings, while Lululemon and Trulieve highlighted narrative and regulatory themes that investors will watch. Analysts note the key numbers. Ciena's adjusted fiscal second quarter earnings per share of $1.64. Teledyne trading around $618.31 with a strong 6-month run. Enact near $40.58, and valuation dispersion metrics in memory that reached into the hundreds of percent. Remember, this is informational analysis, not personalized advice.
Thanks. And one last note. If you follow AI supply chains, watch the next round of guidance from bellwether suppliers. Absent clear raises, volatility could continue.
Great point. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you next time.